floor plans are good for the market they're in, based on the other units that are there, and also factor for like the type of like demographic they're going after. So I don't believe that any floor plan is good or bad. I mean, there are some that I think are objectively terrible, but those are very few. Most of them like could be good in other circumstances. So it could be bad for circumstance in the market, and it could be good for circumstance. One thing is like context is always really important.
Hey guys, it's Whitney. I wanted to take some time to introduce you to my good friends over at PassiveInvesting.com. They're a national private equity real estate firm based out of the Carolinas. They focus on acquiring institutional quality apartments and self-storage facilities. They do this with private accredited investor funds. They have a portfolio of over $700 million in assets and control over $250 million in equity from their investors. PassiveInvesting.com makes it easy for you to start investing in real estate without all the hassles. They even have an average 62% repeat investor rate in each offering they put together. They even have a real estate debt fund that offers hard money loans to local fix and flippers across the U.S., which currently has a 0% default rate. To help you learn more, they've put together a free passive investor guide that outlines the 7 red flags for passive apartment and self-storage investing. Visit PassiveInvesting.com/red flags to download the PDF now. That's PassiveInvesting.com/red flags.
Welcome to another episode of the Daily Real Estate Syndication Show. I'm your host, Sam Rust. Joining us today is Bobby Fijan. Bobby's a real estate consultant based out of Philadelphia with a special emphasis on floor plan optimization for multifamily. Bobby's been involved in lots of development up and down the East Coast with special focus in Philadelphia and currently calls Philadelphia home. Bobby, welcome to the show. Bobby and I met actually on Twitter, which is not a social media platform that many of our listeners are plugged into yet. It's something that I've been prioritizing more over the last couple of months. Bobby, would you mind just sketching in brief your involvement in Twitter and the benefits that you've seen? I'd love for our audience to kind of get a taste of what's the community that's out there on Twitter.
I'm happy to talk about that. I'd say real estate Twitter and the community built there has been an incredible boon and blessing in my life. Like many people over COVID, a lot of different, relationships that I had a lot more ended up paring back in terms of frequency. And real estate Twitter has, one, stepped into that gap, and two, really shown, I think, to me, what is possible within some of the different social media space. So like many people, I had a Twitter account for the better part of a decade. Mostly just followed political news and sports and things like that. And then in the summer of 2020, during kind of the COVID doldrums, I remember just seeing some different conversations that were going on about how the future of real estate would involve conversion of existing office buildings to residential. And I've been involved in a few different renovation projects before and know how challenging those can be. So I ended up just jumping on the conversation, explaining why some buildings would work, why some wouldn't, and found through interactions with some of, more notable people on Twitter, like Moses Kagan and Chris Powers and Antony and a few other people like that, a real community based around niche expertise and intellectual engagement and healthy disagreement, which was incredible. So I'd say from the summer of 2020 to the end of 2020, as different topics would come up, I would explain what I knew and my perspective based on my background in real estate. And then in 2021, I started explaining a little bit more my specific niche interest in real estate, which happens to be around the optimization of floor plans of interior attributes inside the apartment. I am a math nerd, a data geek sort of person. I love, I'd say, a Moneyball approach to things in general, in particular around the way that you visualize data. So maybe more within where different shots occur, within the NBA. So anyway, that's the way that I have thought about different apartments and about apartments. And as I've explained that on Twitter, more and more people have joined in on that. I found Twitter to be a place. One of my favorite essays is an essay that C.S. Lewis wrote on friendship, which says that friendship occurs when two people look at each other and say what? You two? I thought I was the only one. And I found real estate Twitter to be a place where there are a lot of like-minded souls. It's been a terrific place. I've loved it. And I would highly encourage anyone interested in real estate to jump in, whether it's just to observe or to offer opinions where you have expertise.
I appreciate you sharing that, Bobby. If somebody wanted to get involved in Twitter, and a lot of our audience is investors, they're limited partners in syndications, so they're maybe not trying to grow a thought leadership platform. But if you're wanting to just learn and get plugged into that community, how would you go about getting started once you've got a Twitter account? Who would you suggest to look out for? Any lists or trending? Do people still use hashtags, anything along those lines?
No hashtags. There are a few different lists that are put together. The accounts that you should definitely follow first would be Moses Kagan, Keith Wasserman, and Chris Powers, who I think provide a really good overview of the real estate Twitter audience. The folks who are all GPs, and they have really good communication and thought leadership, I think, around what it's like to be an operator. And they also, I think, like good GPs, view LPs as their customers and as people whose money they steward. So I think they have a really healthy balance between that. So I think you'll get a good idea of what a first-class GP is like and some of their different mindset and the way they think about projects. I'm not sure whether they're necessarily raising funds or not, but at a minimum, I think you can get a good idea into what thought leadership as a GP looks like. Moses is in Los Angeles multifamily, existing multifamily and rebuilding. Chris is in Texas industrial, and Keith does value and multifamily across the country. I think he's primarily west of the Rockies, though. But anyway, those are the places I'd start with, and I think you will see other accounts as they pop up there. If you happen to like data and floor plan optimizations, you can follow me. Not everyone does.
Awesome. I appreciate that, Bobby. We like to ask people on the show, how did you fall into real estate? And I was doing a little bit of digging around. I think your first venture was Cross Properties. And in the bio of the website, it mentions that it was founded by a couple of buddies in the basement of a seminary. How did that come together? What did that turn into? How did you end up in commercial real estate?
Happenstance. And I'd say what I found most of that place was partners. I think that any good business, whichever one you're in, really just depends on finding good people to partner with. So I was in school. I was in grad school for math and was talking at a party. One of my best friends from undergrad, David Rice, and we exchanged what different things we were doing. And he mentioned that he and a few other people were starting a real estate development company in a basement of a seminary that they were trying to buy and turn into apartments or turn into something else. And I was intrigued. So I liked the math side of it. I had no background in real estate. I had read Rich Dad Poor Dad, I think, when I was 15 or 16, but I hadn't been particularly drawn to real estate. But I was intrigued as the financial underwriting side. It's like, okay, real estate, I can value it in the same way that I value other kinds of financial products. In undergrad, I'd studied economics, statistics, finance, that sort of stuff. And so I was just interested. And then I think I went into their office, met people who ended up becoming partners, David and Kevin, over, I think, what turned into something where I helped out once or twice. By the end of the summer, I told my wife that's what I wanted to do. So I left school, and her entire life sort of family plans changed. From the very beginning, I remember thinking, I am fine failing these guys. If we do this and waste my time and lose the little money that I have, then it'll still have been time worth spent. And not that I wanted that, but that I was okay with it because I liked those guys. That was in 2011, and that was a really interesting time to be involved in real estate because, especially in Philadelphia, so Philadelphia at that time was considered a tertiary market by the capital markets, and the capital markets in general were pretty dried up, opposite of they are now. So what that meant was that you could put existing real estate under agreement for soft deposits and basically be given time to try and find the capital. And given that between the four of us, we had maybe a few nickels to put together, it was very way of jumping into it. So I don't think for people who are getting into real estate, I don't think the way that I got into it is remotely replicable now, just because, we're in a equity plenty environment. So the limiting factor is getting deals. In terms to get deals are getting more and more and more difficult. But at that time, I think we probably put 7 deals under agreement before we closed the first one. And then the deals that we ended up doing were essentially deals that had a lot of sweat equity to be earned, the ones that were really complicated. And those enabled us to earn fees because the fees you can earn on a stabilized deal are mainly from cash flow. There's a acquisition fee and maybe some stuff ongoing, but that's not really going to keep the lights on. Within development, and particularly complex development, the developer fee is going to be between 4 and 5% of the construction costs, which can be pretty meaningful. And so those are the deals that ended up making sense for us to do. And that's kind of where we got started. And then we ended up riding the wave of multifamily up a bit, did well on a few of those early complicated jobs, and then continued to do more of those. So very glad and that I got to see real estate, the tip of the spear on like the risk perspective. Again, too young to know any better, probably wasn't the right move, but you do learn a lot, right? I mean, we were cash strapped the whole time, robbing Peter to pay Paul the whole way, like any kind of like initial startup business. And that meant that, you couldn't hire people to help you out in maybe the way you should have or the way that would traditionally be done. You just had to learn everything. I got to sit down and read through zoning code myself and kind of figure it out. When you don't have, my partner and I ended up showing up and, we went to West Elm, we went to IKEA, and we opened credit cards and bought like the furniture that would end up going in model apartments, and we assembled it ourselves. So there's things that were not like worth our time, but, you make those decisions out of necessity at the start of early companies. We built that company together. Built about 1,000 units in the Philadelphia area in a mix of mainly ground up multifamily, some student housing, and then a few odds and ends different deals as we came along. We're very a Philadelphia focused developer. I love that. Love those guys.
Yeah. So you've seen the gritty side of multifamily. There's this idea put out there in various places that multifamily is easy. And if you want to retire from your W-2, you just invest or maybe become a GP if the fancy suits you. It's really not the case. There's a lot of hard work that goes into it. And you did more than your fair share. It sounds like I don't envy you for doing IKEA furniture assembly for multiple apartments.
I think one thing that is not getting priced into the current market now is like risk. There's a lot of different like things that people are assuming, whether it's like there's significant risk that when you're buying an existing building, you're assuming that when you stabilize like that there's $100 a month in your market for like increased rents, or that interest rates slowed in and all these different things. But I think that like risk is something that's not properly priced in, mainly because you can raise equity and you can take a flyer on it. Within ground up development, it's a little bit more forced into you, like the risk that's taken, it's always recourse, leverage is always lower, a lot more things go wrong. I'd say what is also helpful, I guess, about ground up is that because it's complicated and it's a little bit more opaque, you get a little bit more credit is maybe the wrong word, but things going wrong is not considered necessarily the fault of the operator just because things happen. Whereas if you buy a stabilized deal, I'm glad I came up in the way that I did. I know people who made significantly more money than I did and did better than I did because at the time that we went into development, they bought into buying apartments in Dallas and Florida and everywhere else at whatever $50,000 a door, and now they're $250 million a door. So they did better. You learn, a lot of those different problems. And the other thing that I feel about real estate is that it is a business, and I'm sure like many other small business, it's one that is proven by like the scars you carry. Forget what book it is, but some book within like the Great Books program that mentions like that there was this, it's a fictional story where like this Roman general like tears open his toga and shows like, this is how much I loved you, right? I demonstrate like my love by the fact that I have like all these different things. And I think that real estate developers are a similar category, I guess, like as a direct piece of advice to any LPs. If you meet like a GP who can't tell you about when things went like very wrong, then they almost certainly haven't been in the game long enough, or they're not telling you the truth.
Either one is concerning. Yes.
Yes. One is more concerning than the other. But yes.
You had mentioned risk, and I read an article that you wrote on LinkedIn about the decision to go start Cross and kind of jump. You were headed down the financial world track. And you kind of did an about face and took a job that didn't have a salary. But you talk about the importance of your marriage in that. I'm just curious. There's so many people that would say, well, I'll take a lot of risks, maybe, between college and when I get married. But once I'm married, I feel like risk calculus needs to change. What would be your words of advice to anybody in our audience who's maybe a little bit on the younger side and is trying to factor in personal risk? Obviously, there's particulars to every situation that are impossible to speak to, but as a broad, sweeping generalization, what would you proffer to folks in your shoes maybe from 10 years ago?
I'd not be an entrepreneur without my wife. One, she financially kept like food on our table for the first few years of development. We're very lean, and also enabled me to take every dollar that I kind of did earn and throw it back into the project. Although, because every project was over budget and behind schedule, it's not like there were that many anyway. But without my wife, would not have done that, practically speaking. And also in terms of that support. And I'd say that like being an entrepreneur can be very lonely. Other people have different kinds of things, and there are all kinds of entrepreneurs who are single, who've done well. One thing that I would tell people who are younger is being married doesn't mean that you should preclude you from that. It did have some specific decisions in that like it did cause my wife and I to delay having kids, which ended up having some health consequences for my wife. Praise God, we have kids now. There were some times where that was not so. It doesn't always go perfectly. I think one thing that I would really try and encourage people on is that starting and failing is very respected. If you're a younger person like me, so had Cross just failed like 2 years down the road, the experience that I would have gotten is still like very different. I would objectively had less money, frankly, into Wall Street and made money, but yet still like there is a gravitas that you can have when you're going to talk to LPs or when you just like believe in yourself and say like, I know I can do this because I have done like the hard work before. And that is someone that, like, not to denigrate people on Wall Street, because obviously they're very smart and very good, but like that's the difference between operators and allocators. That's what I would tell people is do not underestimate the financial gain in terms of risk calculus of what it is like to put yourself and be an operator. You may do that and decide that you don't need an operator. In fact, I think some of the best capital allocators I know are people who were operators and now they're very good allocators. But you will not know what it's actually like to be an operator until you do it and deal with a lot of the stuff that's like difficult, right? Not making payroll, not having the right kind of money. And so as I go into, but I didn't tell my wife, and we put $80,000 on my wife's like American Express to pay for furniture to fit out. And because I knew a construction job was coming in, I knew, quote unquote, a construction job was going to come in to backfill it. Again, thank God that came through. Again, some of those kinds of, again, I wouldn't recommend anyone do that. Yeah, the specific thing I'd say is you will come out of there with the ability to look at an investor or other people in the eye, or maybe it's just yourself in the mirror and say, I know you can do that. And you find that out by, being tested.
Entering into ventures where there's a chance of failure is so important. And not just a really low chance, because almost anything can fail, but there's real tangible sweat equity, dollars on the line. Yep. It'll make you dig deeper than you thought you could. Yep. Succeed or fail, right? And you'll learn a lot either way. Sometimes more from your failures almost.
Certainly more from failures. If there's also one other thing that I would think is apt to remind people of this sort of moment within real estate is that many people who've done really well, denigrating anyone, but like we've been in the boom for a while. So a lot of different people who have great track records within real estate. This is the phrase during like the Game of Thrones, where there's talk about there's children but born during the summer, and there's people who doesn't know winter's like, right? But then how stark is always like winter is coming. So I'm not trying to be like a Jeremiah kind of thing of saying like winter is coming. I mean, but it is, but more just
recognize the season that we're in, right?
Yeah, recognize the season we're in, and a lot of people. I know plenty of projects where people have made mistakes, including myself on various projects where people are getting bailed out by cap rate compression that in other markets would have not. So I think it's incumbent on good GPs to look at that and not just write that off and say like, I'm amazing, my advice is incredible, but to more say like, feel lucky and say, did do well, got to operate better. And, that's why, a post-mortem analysis is good even on wins. You can look at that and say, what went wrong? What could have killed us? So let's avoid those things next time and not just pretend like we were amazing.
Yeah, I think the most dangerous place to be is believing one's own greatness, but particularly so in real estate right now. Something that we talk a lot about at LifeBridge Capital is, we started in 2018 functionally. We've seen nothing but summer. And who knows where we are in summer? It might be the end of an Indian summer in September. We might be in July still, but we need to prepare for that inevitable fall, that inevitable correction that will come. It's just a matter of time. So we've spent 20 minutes here or so, Bobby, and we haven't even gotten to floor plans yet. Let's pivot there. And talk about why you're the floor plan guru on Twitter. Just on Twitter today, found one of your threads that you'd put out. Each unit has over 100 plus variables, and we're talking for our audience specifically about unit interior floor plans. So how rooms are designed, where islands are placed, where bathrooms are placed, et cetera, et cetera. And you talk about there's several years of analysis. There's some variables that you're 1,000% confident make a difference. And then there's some that you're just less so. So maybe a good place to start at a high level would be, what are a couple of those factors or design elements that you're 1,000% sure make a difference to an owner, to an LP, to a GP of a multifamily property?
I'm glad we're making this transition. I've loved floor plans for a while, and it's because like my background in math, and also because the way that I entered real estate without knowing other things, it was only to put that kind of model or put real estate onto other models, mental models. I had my own mind, which is about taking things and breaking it down into smaller components. Features that definitely drive. I'm trying to think about how to answer that question without getting into too much detail. First thing I say, I asked this question by Twitter also, and I was like, there is no perfect floor plan. The main thing that I'd want to break within a data analysis and floor plan analysis is that, to the extent that exists, floor plans are good for the market they're in, based on the other units that are there, and also factor for like the type of like demographic they're going after. So I don't believe that any floor plan is good or bad. I mean, there are some that I think are objectively terrible, but those are very few. Most of them like could be good in other circumstances. So it could be bad for circumstances in the market, and it could be good for circumstances one thing is like context is always really important, whether it's the context of the individual building, whether there's like a stairs there, a hallway, or a certain kind of setback you don't know. And the other one is you don't know the makeup of that particular kind of apartment. So with that huge caveat aside, I would say that the ratios that matter quite a bit are one, surface area to volume ratio, which is basically saying, are there a lot of windows in the space and does it have high ceilings? That's kind of like a fancy way of describing that ratio. And the other one that gets a little more specific within the unit is living room width is directly correlated most of the time with higher rent per square foot. And rent per square foot is the thing that you're always, in my opinion, always trying to optimize for. With other different kinds of restrictions, unit count, size, etc. That is the, you want to maximize rent per square foot. Surface area volume ratio is the other big one. It's kind of why, it's one of the reasons why office buildings make for very tough conversions, because they have much deeper floor plates, because there's going to be a lot more elevators and hallways, stairs, public bathrooms within an office building, which won't exist in an apartment building. You need a really good surface area volume ratio. And then the other thing that you want to look out for is the number of inside corners within the building, which is why the notorious like Texas donut has a lot more of those than say like a single straight double loaded corridor. So the most efficient, best building you can have is between a 60 and 65 foot wide double loaded corridor, straight rectangular apartment building. There's going to be architecture on top of it, but that's the fundamental basis of what you're going to want in a building. So if you get one of those, that should have much higher rent per square foot than a big, deep, cavernous industrial warehouse conversion on kind of the opposite extreme.
So we've done some floor plan analysis at an extremely rudimentary level. Sure. And the challenging thing for a lot of folks is just the amount of variables that you have to consider. You have to consider the design elements that are common to your local market. You have to make sure you're comparing vintages one to another, different unit types, location within a submarket. So as we're peeling back that layer of the onion, you're talking about rectangular buildings broadly that provide the best design elements. Is this mainly something for ground up development, or is this something that you also have seen applied into value add components as well? How much of this can you fix after the fact or take into account? And when you say significant rent difference, how significant are we talking?
Let's start with existing. Yes, it makes a big difference. How much can you fix? Well, it depends. One, what you're willing to spend, what you're willing to do. Obviously, like you can turn an office building into a residential building. That's the most extreme. If you're dealing with existing apartment building, what is the degree you can fix it? Because they believe that changing flooring, changing the color of the appliances, paint or not on the cabinets, and upgraded bathrooms moves the needle in rent. Right? It's an established sort of statistical thing that moves rent $100 a month on even workforce housing. And people obviously going to spend billions of dollars this year just in equity pursuing that sort of strategy. How much can you move the needle on an existing building? If you're not moving walls, not that much. In terms of how it should factor in, I think it should factor in a lot, because the crux of the value-added investment is to say that you could believe that rent can be pushed by a certain amount. So frankly, if you are not doing apples to apples in comparison between units that due to their limitations, can't get that higher rent per square foot because how they're laid out, you're taking just as much risk. We talked a little bit on the ground up thing, because you are assuming that statistically that the units in the market are the same fundamentally as yours. So to me, even if there are, and I agree that breaking units down in this component is extremely difficult. At a rudimentary level, what I recommend is what I would demand that other people do as both investors and GPs is physically look at the difference, or visually look at the floor plan that you have and everything else does, which is frankly the best analog for the way that a potential tenant is going to. We tend to, within data, just look at these rental comps analysis, and it's something I have posted on Twitter, and we look at it's a very numbers based, right? There is, within my market, there is this building that has a one bedroom that's 675 square feet and a rent for this. This building has this, and then you go into different finishes and fixtures that each one of those different things have. Well, there are 625 square foot one bedrooms that are great, and there are 625 square foot bedrooms that are bad. Similar to sports, one thing that I believe very much about statistics is you know it when you see it. So look at that and say if you just want to say, I rate this unit as good, bad, or ugly, right? Then at least layer that on. That to me would be significantly better floor plan data than we have now. Right now, it is treated as identical, which we all know isn't true. So don't do that. And then you can also just at least make it three-dimensional, right? Like people change construction types to get in like different ceiling height, but use square footage to like describe the space when we don't live in a flat land, right? So square footage is frankly a comparable metric anyway. One, know that you're using floor plan data, whether you believe it or not. You're just using bad floor plan data. And I'd also say like trust your gut a little bit more. And in going the direction of looking at rental comp based on the floor plan, you're putting yourself more within the shoes of like your actual tenant, which is again just like better. It's just thinking more product oriented, and not to beat up on value add investors too much, because I know you're one, and I know other people are too, and I think it's a good thing to be in. But I think there's too many people who are presuming that they're actually improving people's lives by like adding crowd molding, right? Like the same apartment with crowd molding, it doesn't actually do anything to it. And not to equate, although I am doing it, but not to equate too much, some different cosmetic improvements with adding crowd molding to a house. The logical, I guess, like direction of that is fair. And so I think at least getting into it and say like, how am I improving someone's life? Am I improving their life like this amount by changing this bedroom on ground up, or in the value add side of saying like, how can I make things happen to make people's lives better, rather than just doing it on mark-to-market pro forma.
Well, I'm somewhat relieved to hear you describe what you should do at a minimum. It wasn't all that long ago that my wife and I were looking for apartments for us to live in. We went through that process, probably looking for a B-class apartment at the time. And I remember a lot of the things that my wife said about various kitchens, especially. Yeah. And then when we started buying into our first syndications, I actually took my wife with me on the first couple. And we would walk through and we'd go tour some other properties and just see. And you pick up pretty quickly. I feel like there's a lot of importance in the living room, as you've already mentioned, and the kitchen. Yes. And a lot of times the housing choice is being made by the woman, for better or for worse. Yep. And those are the two spaces that they're going to care the most about. And so we generally rate, is it good, indifferent, or bad relative to the comps in the market, and just layer that 3 points on our analysis.
I mean, so I've looked at, over 1 million floor plans, right, in the United States. Even if you would look at less than that, like if someone was to clear their mind, look at that and say like, let me look at this floor plan, like who is it for? Who is this unit best for? The bedrooms are almost always deemed to be like done like by about the same size possible. Well, what kind of circumstance is that for? Basically people who are splitting housing. Like it doesn't really work that well for anyone else. Like there's no, like in apartments, right? Like you don't see that in single family homes. You don't see that in other things that are customized, but within apartments, and the way that I describe it is that I think that apartments have often been built in the past in order to offend as few people as possible. Why the walls are white, cabinets are 3 different colors, floor, countertops are 2 different colors, flooring is like 1 color, right? It's like, or I guess light gray or brown, right? In order to, again, just like be as vanilla of a box as possible. That's just not the way good products are created. I take floor plan data analytics, I think, to like to an extreme degree, but I think, not to undersell that discipline, most of it, a lot of it, more than 50% of it can be done just by thinking, in kind of reorienting your thinking and saying, who is this for? How do they live? Is this a good like expenditure of marginal additional square footage, right? Like if I had one more like square foot, like where would it go? And that I think can help you decide like, how good is my apartment? How good is this investment based on, again, like who am I going after? If you're in a roommate market, then it's fine. Then it's actually a good thing for bedrooms as close to each other as possible. So like in urban areas, I think that makes sense. But in a little more suburban ones where you're targeting families, then, I don't know any family who wants most of these square footage allocated to bedrooms. They would love to have a smaller bedroom. In fact, they wouldn't even mind having a third bedroom, not have windows, right? I have 3 kids, or 7, 4, and 3, and until recently, our 3-year-old we had blackout shades pulled like the whole time because it's just easier because nap time happens, twice a day. And
blackout curtains are helpful, yes.
They are. Yeah. They are. So not having windows means that it's not a thing that I value as much within that allocation of space. And that's another thing that I'd say like isn't done well when you look at different units. It's like you are spending square footage on attributes. And that's one thing in apartments. People break those different components up too much. The number of apartments that I've seen, leave aside the cost of this, that spend too much money on the kitchen is me like staggering. Kitchens are often designed to kind of look like or feel like other, like a single family home, but it's not. Like a 1,300 square foot apartment is not a house, so it should not have a home-sized kitchen. There are certain people who value that.
But they're probably buying single-family homes. They're going that direction.
They probably are. A family is likely going to view that as a temporary thing anyway. Either they're, moving into a market, moving from apartment to something larger to a single-family home, or in this case, like baby boomers kind of on their way down from, the big house to something.
Often when we're diving into details, whether it's in real estate or any other discipline, when you're breaking down a model into its components, there's various maxims or sayings or just things that are accepted as generally good. And so in the realm of floor plans, is there a saying or a maxim that either is very, very true in your estimation or conversely generally not true or misleading?
They're not maxims because there aren't that many people who care about floor plans.
There's not enough nerds who care, right?
But there are functional ones. And there's one that hasn't changed based on either technology or, frankly, what's good for humans yet. And that is, if you look at every floor plan that's furnished, and then you look at the dimension, there's always going to be a bed with two different side tables and then a TV facing the bed. Lots of research shows that's absolutely horrible for human beings, that you should not watch TV in bed. And yes, wealth of research on that sort of thing. But even if you're going to ignore that and say, I don't care, I think we should design that way, the number of that max ends up having an actual dimensional outcome. So have a queen size bed, have a walkway, and then to have a console table with a TV over it ends up coming up to around 10.5 feet. So that maximum holds. And when you have that box and you're moving it around your individual square footage, it ends up being pretty limiting. What I like to do, both in terms of design and in terms of thinking units, is say, how many of these different maxims do we have to hold and which one could we break? One, I think for the benefit of humans flourishing, I think you should say, we don't need to have a TV opposite the bed. And the other one, just for in terms of cord cutting, and say even in my life when I do watch TV in bed, it's usually just on a laptop, right? Just kind of propped up against a pillow. The percentage of people who watch TV on their laptops versus on a TV across the wall is changing, but the floor plans aren't yet. So at a minimum, there's an opportunity there for people who want to build smaller bedrooms or are more tolerant of that. And then again, in terms of one of the reasons why living room is so directly correlated to that is because within a fixed space, the first two things you're going to set are essentially the wall that separates the living rooms from the bedrooms. And when you have this rule that dictates bedrooms, it ends up coming at the expense of living room because there are no rules that govern living rooms. There is no rule or maxim that says the living room is too small or too narrow. There are rules that govern what is an appropriate bedroom size, consciously thinking of it. That is the maxim that I think needs to die. Doesn't mean there are bedrooms that shouldn't be that size in certain circumstances, but it shouldn't be the rule that it is.
I appreciate you going into some detail on that. That's helpful.
No problem.
We're coming up against the end of our time here, Bobby. What is one thing that's contributed to your success? Could be daily habits, could be mindset. What would be one or two things that you'd point to that have gotten you to where you are today?
Having a good group of friends. I think that one thing that is very, is that loneliness is real, and also friendship takes real time. And especially I think when you're married and you have kids, because your wife's important, your kids are important. So I'd say, a few years into both starting a company and running that and, having a family, I spent a lot of time there and I found myself extremely lonely. And it was lonely because I didn't have any friends. And so I went, the church that's in a view and realized I just need to. So I found another guy who was a dad and I was like, hey, do you want to get brunch with me at 7:30 in the morning? Because when you have kids, you're going to be up early every other Friday. And I really didn't know him from Adam. 6 months later, we were friends. And so I'd say one, friendship is incredibly important and it's not something you can turn on and off. So I think you have to be making those investments in it, whether it's cultural or whether it's some sort of biological thing. I think guys are generally not as good about that. Always investing in new friendships, maintaining the ones that you have, because otherwise you can find yourself in a very lonely, dark place. Unfortunately, there is no quick fix. And also I'd say that it is okay to feel lonely when you have wife and kids. I know I felt like a different other guy who felt guilty for that. I was isn't my wife enough? Aren't my kids enough? And that's just not the way that humans are made. And, we were designed to be in community with other people. The parts where I've seen blessing and success in my life have been ones where I've had more friends.
It's really important. I think we've all heard you're the sum of the 5 people you hang out with the most. So we internalize that. Those of us who are building small businesses, we understand that, quote unquote. But it's harder to apply, especially when you're at the stage of life that we both are with a bunch of kids. You're trying to balance that. But it is important. It's like a bank account that you need to deposit in a little bit. It's got a deposit limit, right? You can only put so much in per day, per month. And you want to be able to withdraw when you hit those times of hardship. And if you haven't done the work, it's not going to be there.
And also, I'd say it's very important for those not to just be business partners or people you work with, because there is going to be not those can't be good friends. And one of my best friends ever was my business partner. There will be a difference. There will be a wall there, not necessarily because of vulnerability, but have friends outside of that. One, because it's interesting, but two, you will need that emotional support.
Fantastic, Bobby. Well, really appreciate you joining the show today. If listeners are interested in what you do, they want to learn more about floor plans, maybe they have a floor plan that they'd love you to cast an eye over. I'm not even sure if that's something that you do, but how can people get a hold of you? Where can they find you?
I respond to all of my Twitter DMs. So if you find me on Twitter, my handle is just my name, Bobby Fijan, at Bobby Fijan. So that's probably the easiest way. And I love all floor plan related problems, and I do actually help other people solve and optimize their individual buildings or get their pricing a little bit better on the projects they're looking at. So that is something I would love to help anyone with.
Fantastic. Well, thank you to our listeners for joining us on another episode of the Daily Real Estate Podcast. This is your host, Sam Rust, signing off.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.